quiet day of consolidation, no reason to complain because the headline index looked pretty okay. We managed to circle around the 24,600 print for the better part of yesterday's trading session. Of course, the tilt of this week is going to be more towards the globe, while of course they had a better last week handover than us, but they fell a lot more than us as well. But having said that, in the run-up to the Jackson Hole event, I think the global commentary, what you're going to hear from Jerome Powell, that really takes center stage. So stable moves is what you've seen for the global markets overnight at least. You had the Nasdaq, which managed to eke about almost a 1% gain. In fact, for both the Nasdaq as well as the S&P, it's managed to post in an 8th straight day of an uptick. So nothing really alarming when it comes at least on the global front. Yes, China continues to hold key when it comes to the lending rates because they've got their prime rate data announcement which is due for today. And yeah, crude prices, they've eased off a little bit. So the construct for our markets looks pretty stable this morning, Nikunj.
Sasha, I think in terms of it last 24 hour, the trajectory or the big picture, I think there is no change in that. What is the big picture? The big picture is that globally we've seen a breathtaking comeback by the bulls after that scary Monday 2 weeks ago. Volatility has got crushed and major markets are not far away from its all-time high. Let's establish that. And it's not India. I think major markets are not far away from its all-time high. And then this entire chop and churn, what we've seen, one of the biggest historical cracks in volatility, and bond yields have convincingly come down below 4%. Now, most of the markets are not far away from its all-time high. That's DAX for you, followed by Dow, S&P 500 and Nifty. So the global strength is so amazing that bulls cannot put a foot wrong. And in this kind of a market, there is no point in trying to preempt how much markets would go. If you're a trend watcher, well, they say trend is your friend. You need to stay with the trend. If you are a SIP investor, well, nothing changes for you. If you are looking at picking up stocks, then you have to understand that there is a churn in the market, which we'll talk about, which is what you need to respect. And that is where the price action is moving. So the underlying strength in the market is global. There is no risk of feeling in the market. Even though a lot has been thrown in terms of macro, in terms of news, in terms of environment, I guess bulls have managed to just shrug it off. I mean, I've never seen such a crazy spike in volatility and such a massive drop in volatility. I mean, this is historic. It's not happened after 9/11. It's not happened after 2008, and it has not happened after COVID also. So we are going through what could be called as an unprecedented times we've never seen before. And the best way is that you need to respect it, make trend your friend rather than question the trend.
In fact, yesterday, if you look at the market, we just came off 30-40 points from the day's high. Bank Nifty became a bit of an issue. It came down almost to the red. And Bank Nifty is 6% higher. Nikunj, that point which you were making, that, global indices are 1.5% away from lifetime highs. Nifty has gone just about 2%, but Bank Nifty is 6.5%. Do you think it will continue to remain a bit of a drag? And other things, as you were saying, that churn is happening. This consumer tech is coming back. Some other sectors are coming back. Profit booking happening in the older sectors which led.
The underperformance in bank is now getting annoying for a lot of market men. I think annoying is the word. Why? Because everybody, in a sense, from last 24 months is of the view that private banks is where glory days should come back, and financials is where the reasonable amount of valuations are valuation advantage is there. But whether it is FI selling or perhaps markets telling you that right now other sectors are offering you better proposition of growth, banks are just massively underperforming. But Nifty is still nearing an all-time high minus banks, and that I think is very, very heartening. But the theme which I want to really bring out here is this entire churn. Now, consumer tech, fintech, new age, whatever you want to call them, those stocks right now are in some, that is like the real high action pack in the market. Similarly, PSU stocks, which are the original leaders of this bull market, they are taking it slightly easy. And you've seen, I won't use the word scary, but you've already seen a subtle correction in some of the PSU stocks on an average. The defense, the railway stocks are down anywhere between 15 to about 25%. So subtle correction in some of the PSU stocks has started, and the markets are completely reorienting themselves to the new economy stocks. And you could ask yourself, okay, what is happening? That's a big departure. Let's look at the definition of new age companies. New age companies are high growth companies. These are companies which are very liquid because they are backed by institutional investors and PE investors. These are companies where suddenly growth and path to profitability is very well defined. PSUs, on the other hand, are old economy businesses backed by the government, low in terms of free float and high in terms of valuation. So markets are saying that, okay, we need to now look at the other side of the spectrum where we want to go for high growth, and everybody suddenly now seems to be respecting the fact that whichever new companies have come out, the first thing they speak is profit and cash flow. Growth comes later. Burnout is no longer the word which is used. Profit and cash flow. So these are things which are making market men very excited because they've demonstrated growth, whether it's Zomato, Policy Bazaar, or even Nykaa. You learn from your mistakes. But for PSUs, it's a completely different kettle of fish. They are the original leaders, but those are backed by government. Those are businesses which are growing because of the government push, and those are stocks which are very low in terms of float, and that's where I think churn is happening. So for me, markets at an all-time high, but this is the big churn which we need to really establish.